Hello everyone, I'm Dion, this is Lewis, and we are Invest in Trust. We're back again for some more investment, I wouldn't say advice, more investment discussions between me and Lewis. And then if you want to get involved, by all means, get yourself in the Twitch chat, throw up some questions. We're more than happy to answer them. Even if we do have limited knowledge on the topic, we can still throw our opinions around and you can mull around with them. So let's have a quick recap with regards to personal things that we've been doing this week. I have had my iChemie professional chartership technical report interview last Thursday. I thought I absolutely smashed it, and then on Friday I got the confirmation email to say, yep, that is true, you passed, great stuff. And then I had my Japanese N5 exam on Sunday, and after a nightmare of trying to get there before the registration closed, I managed to get in there and commit to my 3 tests. 2 of them went really well, 1 of them was probably a bit more of a struggle. Hopefully they'll average out, and I will have passed that. And that's it mainly for the postal news for me. Lewis has been having a heavy weekend on the sauce, as he's been at 2 weddings.
Yep.
Anything else you want to say?
I achieved very little productively this week. It was pretty much a write-off weekend.
I reckon when I got the light on in this room, it makes my hair look ginger, so I'm definitely turning that off now. Has it got dark? Is that still clear?
Yeah, it's not too bad.
Yeah. Okay. All right. Let's swiftly move on then.
Right.
To the top news of the weeks. Weeks of news.
Okay, what's in the news then?
Well, you typed the first one up. It was mobile banking in the UK by 2021. Was that to do with the fact that they reckon that's going to be the main form of payment?
I think I recall that.
I do recall reading where the cash, they're expecting it to drop for the first time below contactless and then mobile phone sort of payments.
Yeah.
By 2021.
Yeah, so I guess it's basically that, the summary of the points that based on the trend lines and how cash use is steadily declining, and there's a kind of a switch between online and mobile banking, that mobile banking will be, like I say, overtake, I guess, the whole general principle of the physical cash exchange. And
yeah, but I feel like it's still going to have to keep the cash.
Yeah.
I mean, like, it's just like checks, in it, because checks never quite went out of fashion. They tried a couple of times to get rid of them, but people were like, well, self-employed businesses need them to help prop up their business. So I guess cash is always going to be needed in small communities, rural communities that perhaps don't have the same sort of technological investment in their areas, such as the bigger cities.
Yeah, well, I mean, it is an issue. I think, is it Sweden or one of the Scandinavian countries has...
It's always the Scandinavian.
No, seriously, they've
put themselves further forward, aren't they?
They've pretty much got rid of all their cash in one of their societies. I'll have to find out. I'm interested now. But yeah, it's obviously affecting the older generation the most. And essentially, there's a big push to go cashless, and I think it saves the country a lot of money in terms of printing it.
Yeah, I think it also saves the banks quite a lot of money as well, because they don't have to pay the rent of the buildings that they're using for the branches. They don't have to pay for people to man those branches, and so obviously overhead is going to reduce as well. So yeah, they're saving money there. But I mean, have you heard today as well that Deutsche Bank have cut 18,000 jobs across their global workforce?
I saw the headline.
People just rocked up this morning in Tokyo, and they've just been like, "Yeah, we're done. We don't need you anymore. There's your stuff. See you later."
Yeah.
So I guess the big banks are just slimming down, taking a real hard look at the way technology is progressing, and then how they can actually incorporate that to streamline and maximize their profits.
Well, I think it'll have stemmed originally probably from the financial crisis,
that'll definitely push the sector towards using technology.
Yeah, a little bit more automation, a little bit more algorithms, that sort of thinking to try and take the human factor out of it.
Yeah.
But I just saw it as quite an interesting
little article that you throw up.
Well, we're talking finance. Let's talking investments and
we're talking about finance. We've got to talk about banks, right?
Yeah.
Next topic: Iranian crude oil supertanker was seized off the coast of Gibraltar by the UK. Apparently, this Iranian crude was scheduled to be delivered to Syria under the, I can't remember, I forgot the guy's name. The guy who runs the country at the moment, the one who's committed a massive amount of genocide and chemical warfare on all kids there. So that's been seized. Obviously, that's escalated tensions between the UK and Iran. America's like, well, if it's transporting banned crude, then it's got every right to be seized. And then Iran, I do remember reading somewhere that they should say we should retaliate and then seize one of the UK supertankers. So the situation, not conflict, but the simmering in the Gulf, the Persian Gulf, it's still ongoing. It's not really dying out, but it's not really escalating. It's just sort of the background noise there, and it's probably just waiting for one sort of bubble just to pop and send the whole situation into red alert escalation mode. So yeah, that one's still ongoing. Seems to be in the news every sort of week now with regards to something spat between Iran, the UK, or America.
Yeah, I think we've been following it for 3 or 4 weeks now.
Yeah, a good month now. Yeah. So Jeremy Hunt's also been busy sticking his nose in with regards to the protests that's going on over in Hong Kong at the moment. So for those of you who are not aware, Hong Kong was given back to the Republic of China back in 1997, I do believe. It's been in the British rule since 18 something or other. I think it were under a British colony rule for 127 years, but I could be wrong. What's the word? Don't guarantee me on that.
Don't quote you on that.
As part of the deal, essentially, China was going to let Hong Kong have its own democracy, and it was going to be a two countries, one system for 50 years as it integrates into it. So basically, where all these protests have kicked off is that the Hong Kong government were trying to introduce an extradition law that would allow China to directly extract criminals from Hong Kong into the mainland China. Now, obviously, a lot of people were quite vocal about this because they thought it was just another way of China getting involved in extracting and taking essentially their human rights away, because they could just take people who oppose the regime and then take them into mainland and you wouldn't hear anything else from them, abducted. So that kicked off. That's been going on for about 2 or 3 weeks, and then last week there was the sort of the ceremony for when the UK handed back the Hong Kong and the territories to China. So it was like a flag raising ceremony or a recovery ceremony. Obviously, there were protests that married that, and then I wouldn't say tensions have been rising, but there's been a little bit of spats between China and the UK, with the UK saying, "Oh yeah, we back Hong Kong to activate these protests because it's democracy and they should be allowed," and then China's turning around and saying you shouldn't be encouraging violence and you should keep your nose out of our affairs. So how does this affect economics and investments? Well, Britain's going to be looking for, ideally, probably a trade partner agreement with China when it comes out of Brexit, assuming that it comes out of Brexit. So they kind of don't want to hit the hornet's nest too hard, I guess, with these little jabs and barbs, but at the same time, Hong Kong's a massive financial hub. There's a lot of money that goes through that and then goes into China, and then it probably comes into the UK as well from the connections that we've got there. So we don't want to be seen as letting Hong Kong be swallowed up by the Chinese, I guess.
Okay.
Yeah.
So it's kind of, I guess, just biding our time a little bit and making sure we're on the right side of them.
Yeah, tit for tat, really. You look at the future and say, right, Brexit, if we're having it, want a decent deal with them because they're a massive manufacturing country and exporter, and we import a lot of their products. So, treading the fine line, right? I'm going to turn this light back on. I'll be ginger. It's all right. Right, what we got next?
Data leak.
Oh, yeah, the new data leak. British Airways have been fined today 183 million over their data leak, which is a substantial amount considering that before this, the largest fine that they dished out was 500,000 to Facebook, I do believe. So this is because of the General Data Protection Act that came in 2017? Question mark?
GDPR,
yeah, GDPR. And
it was on last year.
yeah, you're right. And the regulations are allowed to fine up to 4% of the company's annual revenue. And I think, they've just sort of tried to make an example of British Airways here for the initial data leak that happened, and then they've slapped them up with a big fine. So you could expect quite large fines in the future, particularly if a company like Apple or Google or Facebook. I'm surprised Facebook haven't already been busted for this for quite a large fine. But it could be a regular thing. So we're going to see companies starting to tuck away a little bit of money on the side and just say, well, we're going to get fined because we've had X, Y, and Z data leaks, so we'll just save that. It opens up interesting possibilities of perhaps ethical hackers trying to data leak certain companies like BP or whatever it is, and then letting them be slapped with a big fat fine as well.
I don't think it works quite as much as that. I think the aim of the fines is so that rather than getting fined 183 million, you invest 10 million in a decent computer security system, because like the data breaches from TalkTalk a couple of years ago, I think Yahoo as well, they were just basic breaches in data. And it's like it didn't take much to get access to all a lot of people's personal data.
No,
I think it's just kind of slap on the wrist and say, come on, we're not messing around anymore. Look your ideas up.
Yeah. Here's an example. We will actually slap the full 4% if you don't stop dragging your heels.
Yeah.
All right. Well, I guess that's the. Oh no, you got another one you want to talk about?
I do want to do it because I haven't seen the video. You sent me a link.
No, I was talking about the money box one.
No, you sent me a link to the Woodford Fund. We've talked about him for the last couple of weeks, Mr. Neil Woodford.
Yeah, Woodford. Mr. No Remorse Woodford.
Yeah, so he said he's published a
video informing investors of what's currently going on with his fund.
Is it still locked up?
It is still locked up. There's still no date with regards to when they are looking at opening it up. If you are interested in watching that video, you want to head over to woodfordfunds.com/word/borg/fund suspension extension, and you can watch the video there. It's about a 3 or 4 minute clip. And then you can judge whether or not you think he actually means what he's saying, or whether it's just a full a sack of beep.
Okay, swiftly moving on. So this week, that concludes the news for this week, I think.
Yeah, the news that we scraped together, in this busy week that we've had.
So I think the topic that we were going to talk about is passive income. I think it's quite a hot topic for a lot of people because it's talked about in many different ways.
Yeah, for sure.
And I guess it's just trying to understand what it is, why you'd want it, and what benefits it gives you.
Yep.
And then we'll probably talk about
what sort of you can do with the.
Well, we'll talk about what it is. Then we'll talk about a little bit of what we think it is and how we would try and implement it, and I guess why we want to implement it. And then, I guess, where do you want to start?
Where do I want to start? Well, I guess we should start with what the definition of passive income is.
I don't know if there is
one. What do you think? What do you think your definition of passive income is?
I would like to think it's something that you might invest a little bit of time in up front, and then it reaches a certain point where you don't have to invest much time or doesn't require much management, but the income from that continues to flow.
Yeah, I'd agree with you on that, but I'd probably say it's not, just a little bit of time, depending on what sort of avenue you're looking at to make this income stream. It's probably going to be a lot of your time. But once it's up and running, you'd think that's it. You've put the effort and time in, and then this should just gradually trickle in capital regardless of what you are doing. So you could be working your normal 9 to 5 job, getting paid for that, and then also your passive income streams are also piling money into your bank account. They're also piling money into your bank account when you're sleeping. It's basically just dripping over 24/7, dribbling it in. That's what I'd class as passive income. It's income where you don't actually have to actively work for it anymore.
Do you think is there anything that's truly passive then? Because
no, because you have to put effort and time into first to set it up and get it running, right?
Yeah, but even then, if there's something, right, you invest a total amount of time up front and then that's it, you just leave it. I don't think that's achievable for anything.
It's not, but
I
guess it depends how much you value your time, though, right? If you build a decent income stream with, I don't know, putting 100 hours into, you've made a piece of art, right? It kicks off, and then your reputation builds for yourself, and then every time someone sells that painting, you get a bit of commission. That's a bit of passive income, right?
Yeah, I guess so.
But like you said, you're right. You can't just suddenly just click your fingers and have something slowly dripping in £10 in your bank account every other day.
But you're selling that piece of artwork that you're making commission on is based upon your reputation. So do you not have to do something to upkeep your reputation? Because surely...
I think surely they get to a certain point, though, when, you could just churn out absolute trash and your reputation would just carry it, right?
Yeah, but you're maintaining your reputation, right?
Not when you're selling trash.
Well,
no.
Then surely the price of your artwork comes down if you just constantly producing trash.
Yeah, I guess so. But I guess the thought is that you don't have to put as much, the amount of time you have to put in is a fraction compared to what you initially spent building it up.
Yeah, I would agree with that. That would be my definition. Is that probably the time you have to invest after the initial investment is, like I said, a fraction of the initial investment. So it might be an hour a month.
Yeah, because you streamline the process and you've got good with it, right? Get good.
So yeah.
Okay, so some quite loose definitions there that we've just been throwing around. I didn't think we really can't really sum it up in a sentence.
No, I don't know. But everyone has a different idea of what passive income is. But the one that's sold to you is, you can do this thing right now, spend a bit of time doing it, and then go sit on a beach for the rest of your life whilst it pays for you.
Yeah. I guess that's the ideal one that's sold to you.
So yeah, I guess. Well, what sort of plans do you have, Dion, then, for your passive income streams?
Well, I think there's a couple of ways of looking at it. There's looking at stuff that's going to take a lot of time and effort to invest in order to start getting some revenue inputs. Stuff, for example, like you could write a book, but obviously you don't need anything. You don't need to invest any capital in that in the first kickoff to get some sort of income. You can just, grab a pen or open up your laptop and start writing it, but you need an inspiration, an idea. And then I feel like you need to be doing it because you're enjoying it, not as opposed to, I'm going to write this book and then make an absolute fortune out of it, because I don't think the quality will quite be there.
I think that goes for anything that you do in life. I think there are probably some easy, cheap wins that the occasional person gets lucky with, but the majority of things in life you have to enjoy if you're going to make any kind of...
Yeah, for sure.
I think, the money's going to come as a result of the actions that you're taking, not be the result.
The effort and the but it's not guaranteed.
No, well, it could be £10, it could be £10,000.
Yeah. That, I guess passive income streams, you could probably split it up into two sections. You can put it up into no capital required to make the passive income, and then capital required to kickstart the income. So I guess capital requirements, we're talking about stocks and shares that pay dividends. You need an initial cash pile to buy the stocks and dividends. Other than that, you probably need 10 minutes of your time, open up an account, put your trade down, and then just leave it to go. So there's not much maintenance that you need to do with that if you're an income investor. But there again, the returns are not particularly high. I mean, your yields are looking at maybe between 2 and 8% on a decent sort of level. Another capital investment you could do, another income stream that you could generate that you'd need capital for, I would say, is property.
Yep.
So I don't know whether you want to talk a little bit of that one, since you do have some real estate yourself.
Sure. Yeah. So I mean, obviously it takes a little bit of planning. There's different ways you can go about it. So if you've got a huge lump sum of money, you could just buy it outright and then rent it out. Or the alternative is essentially to split it out a little bit. So you buy one property, you might pay 50% down or even less, and then the person renting that property pays the mortgage on that property, so you don't actually get the income straight away. But with the other 50%, you could do the same thing elsewhere. So you actually have two properties where two people would be paying down the mortgages, and then towards your retirement, you've got hopefully your property that you're living in, the two other properties, and you've got that solid income from those two or three, depending on where you're living.
Once, and especially when they've paid off that mortgage as well, then it's just pure passive.
Yeah. So that would be the goal. I know in the UK we've had a few different laws come in where the profit margins have got a little bit tighter just because of little changes in the law. And so you used to be able to claim back the full cost of the mortgage each month as part of the rent, and now you can only claim back the cost of the interest on the mortgage. So a little bit different, but it just eats into those profit margins. That's all. Still maintainable, still achievable.
It's still a passive income stream as well.
It is.
It's quite a lot. I guess once you've built your capital empire, shall we call it, it's definitely worth looking at having assets in property for your portfolio, just for the pure reason of the income stream if you want, and then also the capital gain that you get when you do sell it on, if you choose to sell it on. So let's talk about some of the income streams you can generate where you perhaps don't have any capital to start off with, and you're literally just working with zero capital. And it's the more of the inspiration sort of ideas, really, isn't it? It's down to creativity, this sort of stuff, and we're looking at books, we're looking at artwork, we're looking at music that you want to produce, maybe some YouTube videos or some media you want to put out there. And this is not going to be an overnight success. You're going to have to put a lot of time and effort into these channels, but there's plenty of opportunities out there. I mean, the internet's an amazing tool to distribute content, set up your own business to, distribute T-shirts that you could possibly do, or you could distribute mugs or something. You could set up a business online quite easy, but it's still going to take a lot of time, and it's going to take a lot of work as well to get to the point where you might be earning a decent amount of side income from these passive streams. But you would have thought once you've got to the point where you're actually starting to earn passive income, you've streamlined your whole process because you've been working on it so hard for so long. And then you've got physical assets as well. So, for example, if you do become successful at art, then you have all your artwork as an actual asset that you can then sell on. You've got books that you can sell copies of that are going to produce your income stream as well. If you've got media content up there, you put it on YouTube, you can put it on Twitch. You've got videos there that people can go back and watch. It's been monetized because people want to put adverts on it because you can have a wide subscriber base. So it starts to stack up once the ball gets rolling. It's just getting the ball rolling and committing that time and understanding that it's not just going to fall off a tree and be gifted straight into your hand.
Yeah, I completely agree with everything you just said. The way I've been sort of getting to understand it is in the past there's been a lot of middlemen. So the middleman used to know the audience, and you would have to get on well with the middleman to produce whatever it is you want to produce, whether you want to be a video producer or movie star, singer, songwriter, whatever it was. There was a middleman, a gatekeeper, that if he didn't like you or your face didn't fit, then you couldn't do it. But I guess, since the invention of the internet, as we all can see, there's many people that have found that there's not many middlemen on the internet, and you can find the right platform and with very little upstart just start producing the things that you want to do.
It gives you that platform, doesn't it, to reach a wide audience with the content that you're providing or the skills that you're essentially selling or the products that you want to throw out there.
And the only thing really that defines the success is, I guess, the the consistency of showing up and the quality eventually. Like, it doesn't have to be high quality straight away, because
no, but you don't want to get your first £10, let's say, passive income, rub your hands together and go, right, I'm putting that straight in my back pocket, I'm going to go spend that on weekend. Ideally, you want to then funnel that back into your passive income stream.
About it.
Yeah, improve it.
So that,
you record videos with a dirty camera, get yourself your passive income that pays for a decent camera, invest it back into whatever it is that you're making videos of.
Yeah, I agree. Like, you've got to think like a business, if that's, if...
That's if you want to monetize it. I mean, this could just be a hobby for you or a passion, right?
But we're talking about passive streams, aren't we? Yeah. So, like, the whole idea of, let's say you're talking about dividends, you don't just want to keep pocketing those dividends when you can see if you reinvest those dividends, you can get some real compounded growth, because then you're getting interest on the dividends and again and again and again.
Rinse and repeat.
So, yeah, think of it like a business. If you're making money from doing something, do your best to reinvest that the best way you know how. So if you could streamline a process, or let's say your laptop's not that good and you want to buy a new laptop, let's look at getting one that's going to improve the quality of whatever it is you're doing, rather than just spending it on stuff for the sake of it.
Yeah, just because you got a little bit of extra income now and then. Your mates are calling for you to go out.
Open the bar and get all your mates drinking there.
yeah, open a bar. Yeah. I can't imagine that's a passive income, is it? Because you've probably got to do a lot of work in that, unless you start outsourcing it to other people and putting your trust in other people.
Well, a lot of bars and a lot of bar stuff.
Look at you now.
I guess that's the goal, isn't it? Is to keep maximizing these minimum amount of effort passive income streams and make sure you enjoy it as you're doing
it. Yeah, there's nothing sweeter than getting money in whilst you sleep, is there?
Well, I don't know. I've never experienced it, but
it'll happen
when I do,
day, man.
I'll throw back to this conversation and I'll let you know my comments.
So I guess let's just throw our personal experience with this stuff then. So I've got my passive income at the moment currently in stocks and shares. So my typical sort of yield percentage at the moment is around 4% of my total portfolio is what I make in dividends. So it's not a bad amount. It's slowly stacking up. Like I say, I think the UK is the FTSE 250 and 100 is an absolute steal at the moment with regards to yield. I think historically it's never been, around 3.5%. I think currently at the moment it's maybe 4%, even potentially even higher with some stocks that are quite blue chipped. So there's definitely some, if you're an income investor for your passive income, there is some bargains out there to be hunted.
Yeah, and that's a little throwback to a couple of weeks ago. I was talking to you about that book. It's can't remember the name. It's so terrible with names. Essentially, it's based upon income investing, but it's not about just buying a stock because it pays a good yield. There's a very simplistic formula that you can use to roughly guess. No, it's not guess, it's formula. So you use the numbers that they've been reporting on and, kind of take a...
Is it share growth?
No, it's not about dividend yield or share growth. It's about the value of the company.
Okay.
So it's based upon their current value, their kind of last 3 to 5 years worth of value, and their projected value, and you can kind of formulate a curve from that. And then from that, you obviously choose. Well, this formula dictates whether the share price or the current buying price is over, under, or on par with value. And the idea is that with quite a simple way of looking at a share, you can, quite a simple way of looking at that stock, you can figure out whether the share price is worth buying now or holding and getting into it later if it's on the decline, or just keep an eye on it if it's on, on the incline.
Yeah, you have to send me this across because I'd be interested to read this.
Well, it's I haven't picked up the full book. All I've been reading is the reviews of the book because it's quite an old book. So I was trying to figure out how much relevance it will have.
Is this the Rascal 1940?
Yeah, the 1958 book.
Right.
I think 58, 48. Can't remember. Essentially, it's about value investing. It's just a technique more than anything. But it's it's got some formulas in there. You can quickly calculate whether a current buying price is good value. And it is based on that kind of long-term growth investment strategy as opposed to making a quick buck. So I thought it was of interest to us.
Well, if you're making a quick buck, you're not really interested in passive income, are you, I guess?
It depends how quick you're making it and how long you can sustain it.
Well, after how loosely analogies. Shit, that's the word. Judging by how loose we were throwing around terminology for what we thought passive income was, I mean, it's anyone's interpretation.
Yeah,
right?
True. That is true.
So yeah, other than the stocks and shares, I'm also looking to publish my book that I have wrote. Dyslexia coming in clutch there. Yeah, so I'll be looking to, I'm just proofreading that at the moment, really close to finishing proofreading that, and then I'll look at ways where I can monetize that piece of work, whether it's going through an agent and then going through a traditional publisher, or whether it's just doing the hipster in-cool thing now and throwing it up on a distribution marketer like eBay or is it Amazon?
Yeah,
Amazon?
the Amazon
This online book that you can do? Yeah.
Kindle Marketplace or something like that.
Kindle Market, yeah, just throwing it on somewhere like that and just self-publish it, I guess.
Yeah.
So those are my two main passive income streams that I'm looking to develop further.
That's cool. So I guess my income streams are, I'd like to, I say I'd like to, I've done it once. So yeah, my family already had an interest in investing in property. So when I did come into a little bit of money, I thought it was a wise thing to do. Did I fully research it? I like to think I did a good amount of upfront research before doing it. But because of the circumstances at the time, it may have been a bit of a rush decision.
Right.
So it is in profit, but is it maximizing the profit? No. So is it requiring a little bit more management than I initially intended? Yes, but we'll figure it out because now I've learned some lessons from that. And as I manage that and kind of take those lessons forward, I know I won't be making those mistakes again. So,
yeah.
Yeah.
Buddy.
I also have a couple of stocks and shares, or have an ISA account, and I think my yield at the minute in terms of dividend yield is down at about 1.3%.
1.3, just barely covering
I told you. I think another thing there was selling BP to make a quick buck.
I don't know
it wasn't a quick buck. It was just
You've had plenty of times to come back into them. I did mention it when they were down at £5.20 that you should have got back in.
Yeah, well, the issue there was I haven't been able to top up that fund as readily as I would like to have had. So, obviously, to minimise fees eaten into that profit, I only really want to invest lump sums of, I don't know,
grand each
yeah,
time,
around £1,000. So, in order to minimise that, as I've made different decisions buying into other things, I didn't leave myself enough to buy back into BP. I thought I might be able to top it up, but it's proving difficult right now.
At the moment.
Yeah, that should be fine after August next year.
That's still a long time frame. You got 13 months to go until that point? Well, maybe even 14 if you classify the 28th of August.
Yeah, so it's 14 months. It is what it is.
What do you
manage that and move on afterwards. There's still a lifetime of contributions to be made to that.
Well, is there any particular area you'd like to see yourself getting into with regards to a passive income stream?
I
guess YouTube videos is one for us. But
yeah, I guess.
hopefully we can grow this channel.
Yeah, I would love to grow this channel. If we could grow an audience from this would be great. I'd also love to have other people input into it. I'm all for the learning, so if other people have better ideas than we do, pipe up, please.
Let us know.
And yeah, I guess if we can grow this into something a little bit bigger, so we have an audience, then I'd love to monetize that as well. This is a little,
at some point.
yeah. I guess our other joint ventures are a little bit more. Sorry, our other passive income streams are a little bit more individual, whereas this would be a bit more of a joint venture.
Yeah, for sure.
It certainly seems. I'm not going to say easier, but it's. It genuinely does seem easier to just keep rolling with the ball.
You have more responsibility when you're doing it with someone else, I guess. When you're doing yourself on your passive income stream, it's quite easy to do 2 or 3 hours of work and be like, well, I'll pat myself on the back there. I'm going to go do something else. You don't have someone breathing down your neck, or you don't have someone.
It's not even breathing down your neck, though, is it? Like, I genuinely enjoy it. Sometimes it's just a friendly little nudge to say, oh, I've put this up on here, give this a read, give this video a watch. Or what do you think of this? Oh, let's not talk about it now. Let's talk about it on the podcast. It's like, I don't think it's pressure at all. Like, I genuinely enjoy it, and just you rolling the ball when I'm not there is passive in itself.
Yeah, I guess so. Doesn't mean I'm a workhorse, though, does it?
I don't know. You definitely and then I'll pick it up when you put it down. Keep that ball rolling.
Yeah, man.
It does seem to feel a little bit easier. Just seems not effortless, but a less effort required.
Yeah.
How do you feel about it?
Yeah. I enjoy it. For me, it's not about the money at the moment.
Well, we're not making any
money. It's definitely more about just having fun, catching up with your boy, and then just talking about something on the side that we're both interested in. Like you mentioned, it'd be great if things did take off, and then you could monetize it in the form of videos online and adverts and all that sort of jazz. But we do both understand that it's going to take a considerable amount of effort and time. And then, I don't know, it's like you often hear about these things where best friends or brothers go into ventures and then it ends up turning sour later down the line.
Okay.
I don't know. I mean, obviously some of them are a success, but I think family and business is always quite difficult because it's one of those things where you can take it outside of your working partnership, can't you?
I suppose.
Yeah.
If you wanted to take it in a different direction and I disagreed, then there's a disagreement. But I both think, I think both of us manage, we're both pretty level-headed when it comes to things like that.
At the moment, yeah, but I mean, if you started throwing around 100k a month or whatever it is, some passive income streams, are you telling me if you wanted to go one way and now we're going other, and we both had different projections of what we're going to bring in? Do you still think we're going to be level-headed then?
Yeah, I think we would. Well, I completely agree with that. If the way we deal with money now, it's the way we deal with our time now. It's the same thing. We value the time that we spend together just because someone's throwing in a bit of money. What, you're gonna run off and do your own thing?
Well, I can barely run after all the running I did yesterday. I try and get to my exam. Jesus Christ, my legs are so sore today. I ain't going nowhere. Okay. I'm just gonna veg out on this chair.
But yeah, I think I don't know. Money can drive a little bit of envy. It can drive a little bit of bitterness. But I think ultimately, you are who you are, and I've got no reason to ever distrust you ever. So
no, not yet.
If you're running away at 100k, mate,
I mean, you ain't gonna catch me. You can't run for toffee compared to me. I'm
gone.
You
running? Mate, if I got 100k, I'll hire someone to run after you.
Hire someone to run after me. Put him down, boy. I want my money back. Or you could just jump in your Audi, but I mean, that'd probably sort me out. Mazda's got no gas compared to that. Right. I guess we're done with that topic. Can you think of anything else that you want to add to it? I suppose the other thing you've got to remember is that you will have to take into consideration your passive income when you are doing your tax return at the end of the year. It will be important to keep track of incoming streams, just so when you do your tax return at the end of the year, you do have an indication of how much money you've actually had come in, and you've not just sort of seen it go in and go out and then not really registered it. Because you will have to pay tax, and I'm not quite sure what it will be. Is it a business rate tax that you would do on passive income? Or?
So it depends, though, because the way the UK is structured, it's a little bit complicated. There's multiple ways you can do your own tax. So if, let's say it's just you on your own, you would be kind of a sole trader.
Yep.
Technically, if you earned less than £1,000, you wouldn't have to pay tax on it at all.
Right.
If you earn between 1 and 4, you have to declare it, but you don't have to complete a tax return, I believe.
Okay.
So it's basically just a one form submission type thing rather than a full tax return is about 12 pages. And then anything above that requires you to essentially fill out a full tax return.
Yeah.
But so when you're filling out that tax return, you probably either you can be a sole trader, you could be a registered business, and then there's like a limited company as well. And depending on which one you do, just depends. The tax rate doesn't change, but the way you declare it does. It all goes down in the same tax return. But as a business, you're obviously allowed to claim business expenses. So just because you made an income, it doesn't mean that every part of that income was profit. So let's say, for instance, you need a laptop to run a business. You can declare that laptop as part of your business expense. So if you made £1,000 and you paid £500 for a laptop, £1,000 is probably like this. If you made £10,000 and you paid £1,000 for a laptop, you wouldn't get taxed on that £1,000 laptop because you need it to run your business. So let's say you needed other instruments, tools, whatever, when you bought all that gear. There's so much of it, if it's required, you can claim it, including claiming the expense of an accountant. So you can essentially hire an accountant. It might be, to do the tax return for you. So as long as you kept track of your receipts, anything that you bought, all the VAT numbers when you bought it, and stuff like that, you can essentially hand over all those documents. The one thing to note is, it makes the accountant's job a hell of a lot easier if you have a separate bank account to your personal bank account for these income streams.
Okay. Yeah. That would definitely make sense. Business account as opposed to.
But it doesn't technically have to be a full business account. It could just be another personal banking account. But because there's no personal expenses coming out of it, and you're running it as a business account.
Have you just
I just read that comment.
Well, stinkiest duck. It's safe to say we would never be in the showers in prison, so you can drop the soap all you want back at your house.
That's an incredible comment. That's completely interrupted my trail of thought. Essentially, you can.
Duck flies in and flies
if you have an income, it's not necessarily profit. So any expense you deduct from your income, and then you're left with profit. Let's say that's only £3,000. You'd only get taxed on that £3,000 rather than getting taxed on the full 10. So, wow.
I think that's definitely made the stream. So fair enough on that front. So with stocks and shares as well, if you got it in an ISA, naturally you don't have to pay tax on any dividends or income or capital gains.
That is one big
So,
thing, actually.
benefit.
Yeah, one
Yeah,
big benefit,
benefit from
is
that.
it's shielded from all income tax, profit, any capital gains tax. It's shielded from a lot.
Yeah, you're good to go. I guess we can move on from that topic then.
Yeah. Anything else? Reviews? Are we reviewing anything?
Who do you think you were referring to? Do you reckon you were referring to me, or do you?
Good question.
Stinky Duck, can you please clarify?
Yeah, please clarify.
Yeah, so, sorry, back to the topic of the week. Yeah, we've done that with passive income now. I think we've cleared that up. Reviews of the week. Right. So now that I have actually... finished my Japanese exam, I'm going to have a little bit more time to put to this podcast resources. So like I've said before, I'm going to try and do some reviews on university courses and then maybe do some reviews on some investment books as well. Now that I can have that free time that I've been sacrificing to revise and practice my Japanese, I'm hoping that I should have a little bit more for this section instead of just saying, oh yeah, sorry, I would do this, but I've got a little bit too much time spent elsewhere in this Japanese section. But obviously now going forward, touch wood, I should be able to put a bit more through.
Yeah.
This is going to be my little section because Lewis does all the software chopping of videos and everything
Speaking
else.
of which, I have, well, for YouTube, I've got all 3 ready to upload in full length, and I have one of them chopped up ready to upload. So we can drop those in kind of over the next week, I was thinking. We'll just schedule, upload them, and start that little archive up on YouTube. It'll also be good to drop in from time to time, or even check back and just see what we were talking about. I don't know, maybe in about 6 months, and just see if anything's evolved from there.
Evolved.
Progressed, evolved, same thing.
Mutates into some absolute amoeba.
Well, yeah. I mean, certainly one of the things that I cut out of the video you just reminded me was the university degree review aspect thing. I thought we could try and capture those little snippets into little playlists. So you could, like, say for instance, you do get one up and running for next week. I don't know if that's too much pressure.
I mean, I've got free time this weekend since I'm not doing anything, unless I can, find a date for a weekend at some point. But
fair enough. Well, yeah. we'll see what happens over the next couple of weeks. But yeah, as those like
I don't know. Do you want to bat it between maybe a book one week and then not a financial, but like a university course the next?
Yeah, absolutely. But what I'm saying is when we do cut them up, we'll put them into separate playlists on YouTube so that they actually make sense and they're not just a little bit random.
Slice and dice. Yeah, makes sense.
So
obviously they will be based off UK degrees and UK money we're talking about. So if we've got any American viewers that are saying, "Oh yeah, your numbers don't add up," well, apologies, we don't deal in dollars over here in Britain.
Yeah, and also our student finance thing works a little different.
Yeah, I can imagine it would.
It's horrendous in the US. Like, it's debt as in real debt.
All right. Yeah, but in their bankrupt. Fucking hell, I can't say it. At their what's the word? Come on, say it for me. Bankruptcy law is different.
Not for student loans.
Right.
Yeah.
But for business, it's different, right? Like if you go bust over there, the banks don't hold it against you as much if you start a new venture and then you're looking for capital. Whereas over here, like it basically tarnishes your credit rating and they won't be as likely to lend you some money because you failed one.
But the thing about like capital ventures or venture capitalists out in the US is they're not going to the banks for money.
What, are they going to private equity?
There's a huge like separate private equity like funding. It's structured like a completely different system.
That's a topic in itself by the sounds of it then.
Maybe we could actually get an American to explain that one though.
Well,
we'll translate into English.
do you know any Americans?
One or two. But yeah, in general, like the student loan debt out there is it's
It's astronomical, isn't it? I mean, over a year, it's $9,500, is it, a moment for fees? But I think they're going to be talking about dropping it down to $7,500. But over there, isn't it like $30,000 for the year for your tuition fees?
Yeah.
And then some.
I'm not kidding. Like, they come out of university or college with like $180,000. It's like, how? Like, how are you ever going to pay that off? Then again, they do get higher paying jobs out there, but still.
Well, tax rate's probably quite different as well, isn't it? They're not getting taxed as much as over here in the UK.
No.
And they fill in their own tax returns anyway at the end of the year, regardless of whether you're employed by a conglomerate. Because you always see people going absolutely berserk on tax return day over in America. It's almost as bad as the Black Friday videos, isn't it? We see people.
I've never seen that. You'll have to send me it.
Falling ass into the Lotus Walmart to get all the deals.
Yeah. Okay then.
We've definitely backtracked here a little bit.
Yeah. Way off track. Yeah, ETX then. So you just told me.
Oh, you want to do
no,
it?
I just want a quick brief update, not a full intro. You told me you got up and running.
Yeah. So obviously I've not had much time over the weekend to do it because I've been busy with other stuff. But I got on this morning for about an hour. I looked at a couple of stocks. I looked at BP. Didn't want any trends that I was particularly happy with there. I only probably looked at about 5 or 6 because I spent a bit of time fanning around trying to get my graph set up that I want with my 3 trends, and I'm going to go for the 5-day average, 15-day average, and 50-day average. And I noticed on British Land that the 5-day average has started to jump up. It just crossed the 15-day average, which was also about to start up on an upswing, and so I kind of predicted that they were going to cross over the 50-day average as well. So I made an assumption based off the average true range, and then I made my entry point at £5.55. The close on last Friday was £5.64.
Okay.
And I'd set my target price for maybe 3 or 4 days for it to be triggered, and it would trigger this afternoon when it dropped down to about 5.54. Okay. So I'm actually in that trade
so
now.
Is that did you go long or short?
I went long. I thought it's going to be an upward trend. It was showing signs that it'd been scumming around for about a month and a half at levels of around 540.
That's interesting. And
then now that things are starting to tick back up, it's essentially broke out of that trading range of about 540 to 545, and now it's on the way up. Like I say, 564 last Friday, and then now it's dropped back down to, I can't remember what it closed at today. Hang on, just give me a second.
Like, you can do a proper update on.
I'm in the trade now. That's all that matters, right?
Yeah. I was just curious what updates you had. Just the one trade.
Just the one trade. I only got round to because it takes ages to sift through all the stuff when you're really new on this platform and software. Like, ideally, I'd like to be able to just click on the stock. I can see my graph underneath. Right, 50-day average is going down, but 15 average is way up here. There's no way they're going to cross anytime soon. Discard it, and then just like click through the 100 like that. And then maybe have a watch list of 5 or 6 where the trends are starting to align a little bit for the entry points that we're after. And then obviously, if you identify one where the entry point is now and then you can execute the trade order.
Well, that's interesting. That it's actually taking a lot more time than you first thought, because you've done more research on it than I have. So I wonder how
I think it's just getting set up, sorted out. Like, I was trying to save my graph template, so whenever I clicked on it, it just came up with that graph straight away. But it didn't. So every time I had to set 3 different moving average lines and then a ATR underneath it, and it was just took up my time in the morning when I wanted to be doing other stuff.
Fair enough. It's a good update.
It's one trade that I'm in the mix on, so whatever happens here, I could potentially be leading this £10 bet race that we got going
on. I'll hopefully get up and running shortly.
No guarantees.
No guarantees,
though,
right? That pretty much covers everything that we wanted to talk about this week. So, unless Dion's got anything else.
I'd just like to point out that Wood Group's still doing well. It's up at about 4.95. So yeah, I'm definitely still pretty smug with that trade that I made earlier on, where I split my not income but capital over the 2 courses. So I can't remember how much I'm up with that now. Nearly 10-15%. It's pretty good for a FTSE 250 stock.
It is.
Other than that, I don't think any of my other shares are doing anything particular that we've not already covered in the last week. It's been a bit of a quiet week on that front.
Yeah.
I think I've got a payment coming in from Taylor Wimpey on Friday. I think that's a special dividend, so it'd be a nice little 11 pence per share.
Nice.
So yeah, looking forward to that. To reinvest in that. The problem is with dividends when you've not got that much coming in, is that you kind of have like a pool of maybe, let's just say you got £100 worth of dividends just sat there. You want to invest it straight back in, but you don't want to have to pay the £12 in freaking fees.
Not
so
just
you have
fees,
to just wait for
fees.
freaking free. You're basically sacrificing 10% of your dividend yield, not dividend income there before you even put it back in to reinvest. Yeah. It's too much. You just want to let it build, but then when you let it build, you're not gaining anything and you're not compounding. And obviously that's in my LISA, and I've already put in the full 4,000, so I can't add any more. So I've got this like little scummy amount just dribbling around. I'm just like, come on, it needs to drip in quicker so I can invest it in something else.
Yeah, you just need to take a deep breath and be a bit patient.
Yeah. Dividends it's a dribble over time. It's not gush.
Fair enough.
Terrible analogy there.
Right. Anything else?
I don't think I have anything else to add. Like I said, next week, hopefully, I'll have a review of some type. I'll probably do chemical engineering first, because that's my background. I can get some nice figures and hopefully I'll put together some graphs with regards to, saying, typical sort of starting salaries, the sub-genres you have in chemical engineering jobs, whether you're in oil and gas, pharmaceuticals, that sort of stuff.
I'm looking forward to the graphs.
I'll take other considerations into account, such as professional charterships, and if there's any sort of like additional stuff that you can get for the boosting your income. And then I guess we'll use a base case for the university degree. Should we do a master's, or should we just do a typical bachelor 3-year course?
Just a bachelor's, and maybe, well, it depends how deep you want to go.
Because we need like a base case that we're comparing each degree to, right? Like, so we'll say 3 years, 9,500 starting salary. We're assuming you're going to have no grants from the government. I'll specify all this like next week with regards to what we use as that starting point for what you're coming out of university with. Yeah. So I guess that's it from me, but nothing else to add. Stinkiest Duck has still not clarified whether he's talking about me or whether he's talking about you, as who looks as a tough guy.
The scariest person. Well, thanks for watching if you tuned in. Obviously, we just want to reiterate, do get involved, because although we enjoy the sound of our own voices, it'd be interesting to get someone else's point of view from time to time.
Yeah.
And
also, obviously, get yourself involved in some passive income streams if you can as well. It's definitely a good investment of your time.
Or if you already have some, let us know how you set them up and
what's working for you. How did you set it up?
Yeah, we want the details.
Whether or not, how much time you've put in there, like whether you consider it to be, are you still putting a lot of time in now, or does it start to tail off a little bit? And I guess that's it, mate. That's it for the week.
All right.
So thanks for tuning in. It's been fun as always. Are we going to have a catch up on Thursday for the trader account, or should we just leave that for Monday?
No, I'll get some trades in. I say I'll get some trades in. If there's nothing that I fancy trading on, what do you do?
Yeah.
But
I guess you just sit on your hands and wait, don't you? But if in a 2-week competition, mate, you want to be throwing something down. Maybe you want to drop down to 5 and 15 day moving averages as opposed to 15 and 50.
Yeah. I'll get something down by Thursday.
Yeah. Okay. Right. Sounds good.
Okay. Thank you. Good night.
Bye.